Imagine holding a cryptocurrency for years, mining it daily on your phone, telling your friends about it, watching it finally hit exchanges only to realize you can't access your own tokens. Sound familiar? That's the strange reality behind Pi Network. With over 60 million users and one of the most ambitious ecosystems in crypto, Picoin has just shown signs of a price bounce. But behind that uptick lies a mountain of unresolved problems: locked tokens, missing listings, stalled adoption. So is Pi gearing up for a breakout, or are investors being lured into another trap? Stick around, because this story is much deeper than just price charts. Welcome back to the channel, where we break down the real stories behind the world's most talked about crypto projects. If you're into altcoins, DeFi, or you've been following Pi Network from the beginning, make sure you hit that like button and subscribe. Today, we're uncovering the real state of Picoin and what could come next. Let's start with what's happening in the market right now. Picoin is currently trading at about $0.7796, showing a 6% gain over the past 24 hours. That's a small win for holders after what's been a brutal slide. In the past week alone, Pi has dropped 38%, and it's now sitting more than 70% below its all-time high of $2.99, which was recorded just a few months ago in February. While that kind of dip might scare off some investors, it's important to look deeper. Trading volume is slowly picking back up, with over $221 million traded in the last 24 hours. That's a slight 0.8% increase, but it hints that some traders are eyeing a potential turnaround. But here's where things get complicated. Technical indicators are sending mixed signals. The Relative Strength Index, RSI, is hovering around 51, which is neutral, neither overbought nor oversold. That tells us that the market isn't screaming buy or sell just yet. Meanwhile, momentum indicators and the MACD, Moving Average Convergence Divergence, suggest that there's still some lingering selling pressure in the market. And when we zoom in on the short-term technicals, the story stays complicated. The 20-day and 30-day moving averages have actually flipped to a buy signal, which would normally be a good sign of building strength. But at the same time, the 10-day exponential moving average, EMA, and simple moving average, SMA, are still flashing red, showing sell pressure in the near term. So what does all that mean? Well, support is currently forming around 77 cents, which could be the level Pi needs to hold to avoid another sharp drop. But if the coin wants to stage a more serious comeback, it has to break past 84 cents. That's the level traders are watching closely. A decisive move above that could trigger a more bullish trend, but without it, Pi might stay stuck in its current pattern, or even dip further. Now, while price action always makes headlines, the real challenges for Pi Network run much deeper. Ever since the project's Mainnet launched back in February, many users still haven't been able to access their tokens. Why? KYC delays, and they become a major source of frustration. Thousands of early miners who spent years building up their balances now find themselves locked out of their holdings. These aren't just technical hiccups, they've turned into serious credibility issues for the project. In the crypto space, user trust is everything, and Pi's ongoing access problems are starting to test that trust. But token access isn't the only problem. Pi Network still hasn't landed on major exchanges like Coinbase or Binance, which is holding back both liquidity and legitimacy. Yes, Pi is trading on smaller platforms like Gate.io, BitGet, and OKX, but the absence from top-tier exchanges is a major red flag for some investors. Many in the community are starting to ask the hard questions: why the delays? Why hasn't Pi Network, with its massive user base, secured listings on the biggest platforms in the industry? Some believe it's tied to the team's limited transparency. Despite having a large community and a lot of hype, official communication from the Pi Network team has been inconsistent. That's led to rumors and growing skepticism, especially about initiatives like the $100 million Pi Network Ventures Fund. This fund was announced as a way to support new projects and builders within the Pi ecosystem. But months later, there's still no visible progress, no major partnerships, and no real updates on how or where that money is being used. Even more concerning, the actual utility of Picoin is still very limited. Beyond trading and speculation, there aren't many real-world use cases yet. The ecosystem lacks widely used decentralized apps, dApps, or DeFi tools, and without those, there's little reason for everyday users or businesses to adopt the token. Sure, community events like PiFest have helped create buzz and energy, but buzz without utility doesn't last in crypto. Without real products and platforms that give people a reason to use Pi daily, the price will always be tied more to hype than to substance. Still, it's not all bad news. If Picoin can maintain support above 77 cents and manage to break through the 84 cents resistance, we could see it make a run back to the $1 mark. That would be a major psychological milestone and one that could spark more investor interest. But for that to happen, a few key things need to change. First, the KYC process needs to be resolved, and users need full access to their tokens. Second, top-tier exchange listings need to be secured, because broader access equals more liquidity and credibility. And third, the ecosystem needs to show real progress. Whether it's through dApps, DeFi tools, or business integrations, Pi needs to move beyond theory and into actual usage. Until those things happen, any price surges will likely be short-lived. The project has a strong community, and the vision is still compelling. But potential alone isn't enough. Execution is everything. So, what do you think? Is Pi Network just experiencing growing pains, or are these signs of a deeper issue? Will we finally see a real breakout, or will the coin continue to struggle under the weight of its own promises? Drop your thoughts in the comments. We want to hear from early miners, active traders, and skeptical onlookers alike. And if you found this breakdown helpful, don't forget to like, subscribe, and ring that notification bell so you never miss a crypto deep dive. Thanks for watching, and until next time, stay curious, stay cautious, and stay crypto savvy.